Well, I think the first thing you have to do is make sure you set everything up right. There's a bunch of fundamental things that need to be taken care of, such as setting up the right type of entity, deciding how you're going to record transactions for your taxes, whether it be something called accrual basis or cash basis. There is value in the initial setup. Get the fundamentals done first, and it doesn't take much time, and a lot of times it's a free consultation to just get some knowledge about how to set it up properly. That would be my biggest piece of advice for anybody starting on a new business. My short and fast answer to that is be proactive. There are more strategies available to somebody who puts them in place before the capital gain event than there are to somebody after the event happens. If you figure out you may have a capital gain coming up, ask for help, and the options that you have at your disposal to mitigate those capital gains, I would say, is more than double than if you wait till after the fact. So being proactive is the key there. Again, it is more about being proactive, but I think in the case of a business sale, being proactive might be 6 years in advance. So if you know you might be exiting in 5 years because you're going to retire, or because you're buying a company, or you have a pre-revenue company that you're going to build up and you intend to sell it at some point, then you can start looking at taxes right away, because there are certain things you can put in motion that might take 5 years to season based on the tax code that you're going to be really glad that you did. And most of the time, if somebody has a $10 million tax-free sale, it was well worth the time to put that into place 5 years before. Common theme is to be proactive, but on a business sale, even more so. You really want to be speaking with your tax advisor or your CPA on an ongoing basis. We have found that the more engagement we have with clients, the less they pay in tax, and there's a direct mathematical correlation. When I say engagement, I don't mean how much we contact them, I actually mean how much they contact us from their side. So it's definitely a partnership in that respect. But I really think if you really want to pay less taxes, there has to be some effort on your part to make taxes something you manage as a cost, just like you manage any other cost you would in your business. And I think it's an easy one because you're going to have an advisor on your side that can help you, but you have to still reach out at certain times to make sure that you're on the right track. So again, it goes back to being proactive.